What happened?
We got smashed, down by 2.3% on a large amount of volume as well, $6.5 billion worth of stock being traded. And I think it's a bit of a shock because we're used to the market having such a positive bias these days. In fact, if we look at the last year of trade on the Australian share market, only 3 times have we seen a fall of more than 2%. So investors and traders aren't used to it. The year before we saw a lot more than that, but usually we see a drop of this size because of concerns around global growth in Europe. This time, I guess, if we have a look at what's really driving the concerns, it's news out of China that Beijing is looking at curbing property investments. And just to see how important this is for Chinese GDP and Chinese growth, well, in 2012, property investment made up about 13% of GDP for China. So it is an extremely important area. And remembering that this is what's powered Chinese growth along for the last decade. And of course, along with it, commodities, because commodities like iron ore, steel, copper, which is used in building construction, very important, especially for the Australian share market as well. Not helping were the FOMC minutes that we saw overnight, and there had been talk of trying to wind up quantitative easing or even that coming to an end. So we did see commodity prices decreasing quite substantially on overnight markets. So if we have a look at the market today, there weren't a lot of places to escape the carnage. This is the market map, which shows gainers and losers. The losers are all in red. You can see it's red across the board. There's not too much green on screen there. In fact, looking at the top 20 stocks, we only saw 2 stocks increasing in value today, and that was Brambles as well as Suncorp. All the others lost ground. So all sectors were trading lower. Technically, we are watching a few points, and unfortunately today we did fall below an important technical level. Just having a look at the 30-day chart for the Australian share market, this is the ASX 200. Today we fell through 4,986 points, and the reason why this one's important is because it's the 50% retracement from the very high that we saw of the market in 2007 at 6,851 points to the low in the global financial crisis, which was at 3,120 points. So unfortunately, we're back below that level. That means the next area of support is probably the 50-day moving average, and that stands at 4,800 points at the moment. So I've just drawn a line there. But you can see the last 30 days has been quite good. So looking at a technical correction at this point in time and a possible correction down to 4,800 points, fundamentally powered along by concerns around Chinese growth with the property curbs in place, and of course the FOMC minutes not helping.
Charles, interesting comments, but we're going to be getting to them throughout the hour. But Origin Energy, I wanted to get your thoughts on that. I mean, spooked the market, the downgrade very much rattling investors.
I think there was 2 things with this Origin Energy announcement today. One was the downgrade, and one was that costs at its Australia Pacific LNG project looks like the estimates have been increasing there. So if we have a look at this downgrade now, predicting that underlying earnings will fall by 10 to 15% for the full year. Part of that is wholesale prices, which have gone up, especially in Queensland. So it looks like Origin Energy is suffering because of that. And then if we have a look at the Australia Pacific LNG project, well, this has been weighing on Origin Energy's share price for a while. In the last year, before the trade today, we had seen the shares down by 9%. So really bucking that uptrend that we've seen in terms of the Australian share market. And the market's been concerned about Origin Energy because we've seen cost blowouts at other LNG projects. And the worry was that we would have to see some sort of capital raising if we do see costs rise at this project. Now, Origin Energy has come to say that the costs, it's expecting its share of the costs to peak at $4.4 billion. But of course, that's up from the estimates it was talking about in July. $3.6 billion was what it was talking about then. Now, it has said that it doesn't need to do a capital raising to cover these costs, but we know that it is trying to sell down some of this stake, and it doesn't look like it's had much success. So there were some hints that perhaps it could look at selling some of its infrastructure, such as pipelines, instead. So we are looking at possible asset sales for Origin Energy. So I guess investors just a little bit nervous in terms of this stock. It was one of the worst performers today.